It's what?
Today is yet another history, seventh in the series of the University of Abuja.
I don't know why.
Today we have Mr. Olorundare Sodifos, very distinguished insurance man, we call him. Mr. Vice Chancellor, sir, as usual, I would like to invite you to make a welcome to this distinguished guest lecture. Mr. Vice Chancellor. Distinguished lecturer, principal officers of the university, deans, directors, and of the community, distinguished professors, staff and students, esteemed guests, ladies and gentlemen. It is a great pleasure and honor that I welcome you all.
If the thing is charging, this place was to show. So it's from here.
This event is a hallmark of our commitment to fostering intellectual growth, stimulating insightful discussions, and advancing knowledge. At the Federal University of Abuja, we are committed to equipping our staff and students with the knowledge and skills necessary to navigate and excel in an infrastructure. This lecture series is part of that commitment, giving the same studies, industry leaders, and scholars to share their
But this place also show that it's stress charging.
we are privileged to host
From this
distinguished
place.
guests and experts in the field of insurance and insurance. Mr. Olorundare Sodifos. Mr. Thomas is a seasoned professional whose extensive experience and profound insight have significantly contributed in the development of the insurance industry. It's not the insurance solution for restoration. It's not only timely but understanding how strategies, financial plans, and balance what has the role of insurance individuals and businesses to take calculated risks, innovate, and invest opportunities that drive wealth creation. Moreover, insurance mechanisms are crucial in ensuring the sustainability of this ratio by mitigating potential losses and facilitating recovery in the post-capacity. As we listen to Mr. Thomas today, let us consider how we can leverage this insight to our context. Whether as academics or students, we all have a role to play putting everything so risk management and sustainability to the end of insurance. I would like to extend my heartfelt gratitude to Mr. Olorundare Sunday Thomas for accepting our invitation to share his expertise with us today. I'm confident that his lecture will enlighten and inspire discussions that will operate beyond this auditorium. I also wish to thank the organizing committee for their hard work.
So, with your kind permission, I would like to introduce Mr. Olorundare Thomas to you and the audience. With that is granted, I would like to kindly invite Mr. Olorundare Thomas to join me. Stand by and raise your hand. Standing by my side is Mr. Olorundare Thomas, our seventh distinguished public lecturer. He is the immediate past commissioner for insurance and chief executive officer of the National Insurance Commission of Nigeria. Educated at the famous University of Lagos, a bachelor's degree in actuarial science and master of business administration degree with specialty in finance. Mr. Olorundare Thomas was the founding chairman of the West African Association of Insurance Supervisory Authorities, former president of the Organization of African Insurance Supervisory Authorities, former director of research, marketing and development, National Insurance Commission of Nigeria, former director general, Nigeria Insurance Association, former deputy commissioner in charge of technical matters, National Insurance Commission of Nigeria, former assistant general manager, American International Insurance Company Limited, fellow Chartered Insurance Institute of Nigeria, fellow Chartered Insurance Institute of London, member Society of Fellows of the Chartered Insurance Institute of London, member Nigerian Institute of Management, member Committee of Review of the 1997 Insurance Act, former member Government Law of Economic and Financial Crimes Commission. Mr. Olorundare Thomas has made a remarkable impact in the insurance world and has led by example. He is a thoroughbred insurance professional that determines utter determination and unabashed interest that have strengthened the fabric of the insurance sector in Nigeria. He has attended several courses locally and internationally, especially the African Insurance Organization, the World Bank, International Association of Insurance Supervisors, United Nations Committee of Trade and Development, UNCTAD, and Global Leadership Center in Toronto, Canada, including being a resource person at the West African Insurance Institute in the Gambia. In the 6 years, Mr. Olorundare Sunday Thomas has successfully raised the bar of the National Insurance Commission of Nigeria in underwriting, regulation, and management of human and material resources. Mr. Olorundare Sunday Thomas has proved himself as an effective administrator, inspiring motivator, and an intelligent leader who gets the job done unobtrusively and efficiently. He successfully developed and deployed Nigerian insurance database platform and cleared all outstanding claims in the books. Mr. Olorundare Sunday Thomas, secondly, has set a fine example of reliability, creativity, dependability, and commitment in the Nigerian insurance sector, having achieved 6 trillion naira market in 2009 and 2023. Mr. Olorundare Sunday Thomas, who has traversed the entire insurance world, remains a valued and respected icon whose footprints will remain indelible the sands of time. Mr. Thomas is a committed. He professes Christ readily, even in his works. He was married to his beloved wife, Oyade Olashade Thomas, blessed be. And blessed with children. He is a lover of the game of tennis.
Mr. Vice Chancellor, sir, I profoundly invite Mr. Olorundare Sunday Thomas to step up the podium for his lecture. Thank you very much, sir.
You know, when you are set up, then you begin to have some challenges. But I know that I'm in the good hands. I give thanks to Almighty God for the opportunity to be here this morning. My brother, the Vice Chancellor of this great university, Professor Olayemi Rotimi Akinwumi, I especially want to thank you for this great invitation. I do not take it for granted. It's an honor that will remain indelible in my memory. The Deputy Vice Chancellors, academic and administration, I also want to thank you, and I especially want to thank Professor Audu, the DVC, for the care, concern, since this journey started. Thank you very much. And I crave the indulgence of the DVC, the VC and the DVCs and all the principal officers to publicly acknowledge my own sister, the pride of our family, a hardworking, no-nonsense Professor Olufunlola Alabi. I carefully describe her as a no-nonsense woman, very focused, and has set a lot of example for us to begin to follow in our family. We are proud of you. I want to recognize all the other principal officers of the university, the registrar, and the others within the principal officers cadre, academic and non-academic staff of the university, great students of this great university, other attendees at this public lecture, men of the press, if they are here, and I want to say, ladies and gentlemen, it is not all the time that this opportunity is offered for you to share your thoughts about what you love doing. So for these opportunities to be granted to me, I grab it with two hands and truly appreciate. And like I told the VC, I hope I'll be able to meet your expectation at least midway. Briefly, I am concerned about the palpable fear in the heart of people when retirement is coming close. We have had some of the things and challenges that we have in our nation has been as a result of improper planning. But in the course of this lecture, I will be combining issues that relates to insurance and also the pensions environment. This, I believe, is relevant to the institution, relevant to our nation, relevant to individuals. The Vice Chancellor, my audience, I will quickly go through this program in probably 5 brief subheads. We'll be looking at the risks and its evolution, insurance solutions and wealth creation, the Federal University Lokoja program expansion, and I will be concluding with what I call the takeaway of the lecture. I'm conscious of my time, and I will do everything possible to live within the time. I'm most honored to be invited as the 7th distinguished lecturer at the public lecture series of the Federal University, Lokoja, a school with the mission of training employable graduates through competency-based teaching, applied research, and practical community service to the catchment area, Africa, and the world. My summary of this is the mission of the university is to package the academic community of Federal University Lokoja for global relevance. A cursory observation of the motto of this great institution, sic ito and astra. The teacher for Latin was not around when I was in school, so I may not be able to do well in this area. So which means the sky's the limit. Suggests that the foresight of the federal government in establishing this university recognizes the atmosphere of no limit. I must therefore congratulate Professor Olaimi Akinwumi, the Vice Chancellor, and other principal officers of the university in pursuit of the vision and mission of the institution. It is also a delight to appreciate the deputy VCs, staff, and students of this noble institution who I am confident will continue to uphold the values of commitment to academic and moral excellence, which are enshrined in respect, innovation, integrity, dedication, and diligence. I will be speaking on an important subject as it affects the institution as a corporate concern, the individuals, young and old, and the students. In any case, the lecture is intended for everyone that does not have the absolute clarity or certainty of what will happen in the near future. It is on this note, ladies and gentlemen, that I present to you the subject, insurance solution in wealth creation and sustainability. It is also a delight to appreciate all concerned. I will go to risk and uncertainty. The two variables of risk and uncertainty, which are fundamentals of insurance, are critical elements to my discourse, which cannot be justifiably addressed without understanding of the concept of risk and its evolution. The concept of risk. There are varying usages of the word risk that begs the question, what is risk? Does it exist? Does the word risk mean the same for everyone? The word risk, which is used frequently in everyday conversation and seem to be understood but underestimated by those using it. We understand what risk is, but we underestimate what it actually meant. To most people, risk implies some form of uncertainty about an outcome in a given situation. It is therefore important to correlate real risk and perceived risk in the concept of defining risk as it affects various individuals. The Vice Chancellor, my audience, human beings are complex creatures with different variations in response to risk. The pervasive nature of risk enters into all aspects of life, but with varying reactions and responses due to different levels of risk appetites, such as being risk averse, risk seeker, or risk neutral. These are different levels of status when it comes to risk assimilation. In articulating risk in insurance as a concept, it is summarily important to consider risk in the light of the following. Risk as the cause, in which case we talk of the cause of outcome. We speak about fire as a risk, burglary as a risk, accident as a risk. Then risk as a likelihood, the probability of occurrence. When you drive in the rain without clear vision, you are obviously taking some level of risk because there are chances of accident occurring. Then we take risk as an object, which in insurance we call the subject matter of insurance. The car and the driver are often referred to as the risk to be covered. Of course, the driver, if you're a drunken driver, is a major risk going somewhere to happen. It is therefore suggestive that the concept of risk has evolved over time, while we also note variants of risk that were not domiciled with us, but had emerged over time. We call these variants emerging risks. And examples of these risks are terrorism risk and kidnapping risk. These were not with us before now, but today it's a different story. Then let's look at the concept of uncertainties. Uncertainties are the very core of the concept of risk. We reiterate that to most people, risk implies some form of uncertainty about an outcome in any given situation. Risk is defined as the uncertainty regarding the occurrence of an undesirable event of a financial loss. The definition of risk must be justified by two common features: elements of uncertainty and the event could result to a loss. Now we got into insurance planning. Having considered the concept of risk and uncertainty, it is no news that our failure or inability to accurately predetermine what will happen next is sufficient to throw one into worst-case mishaps. Some situations, changes, and challenges occur that interrupt or prevent the build-up and reinvestment of wealth. Despite the best laid plans, life incidences and surprises will continue to happen. These surprises called risk often require the diversion of resources away from wealth creation. In some cases, these unanticipated setbacks can be so large, so damaging, and also costly that they destroy most or even all the accumulated wealth, preventing completely the ability to create and accumulate new wealth. This is precisely the situation for which insurance was developed. Insurance provides a guarantee of compensation for specified loss, damage, illness, or death in return for payment of a specified amount called premium. In short, in return for allocating a small amount of wealth each month or period, as the case may be, to an insurer to cover certain risks. When this risk materializes, the insurer provides the fund to return the insured to the position they were in before the loss. Necessity is now on everyone to devise means of ensuring finances are planned in order to create future wealth. Let's look at wealth creation. The optimality of resources is the true definition of an economic growth, centered on the real growth without creating other significant economic challenges or without negative effects on other sectors of the economy. There is no doubt that wealth in minerals, natural resources and human resources, could also partially define the wealth of a nation. The misconception that countries with vast natural resources could translate to automatic economic growth, creation of jobs, increased government revenues to finance poverty alleviation, and many other positive reflections of the true dividend of development may be a mirage. It does not necessarily follow, and I know that we have examples close to us. Statistics have shown that some countries that are without natural resources grew at about 4 times more rapidly than other resource-rich countries. The dynamics for determining the wealth of a nation is changing. The perverse linkage between economic performance and poverty is not contingent on the derivative or resource per se, but to the structures and incentives that natural resources dependence creates. It is all about planning. We look at sustainability. We are inundated by the reality of embarking on adventures that will guarantee not only creation of wealth, but also ensuring its sustainability. Investopedia defines sustainability as the ability to maintain or support a process on a continuous basis. As a nation, a people, institution, and more importantly, as individuals, we must incorporate the concept of sustainability in our strategy for living and for business models. It is therefore necessary to adopt creation of wealth by ensuring that we identify, analyze, and control the risk that threatens the continuous ability to create sustainable wealth. In this circumstance, it is necessary to note that the most viable strategy of protection of assets, lives, properties, and against future liabilities that could cripple our financial structure is by way of risk transfer. Then we get to insurance solution. The Vice Chancellor, principal officers of the university, distinguished attendees. The control of risk through risk transfer takes me to a major point of discourse today, which is the insurance solution, which can be viewed from the lens of insurance being a mechanism, transfer of risk. It is an arrangement because it's a contract. And it's also considered as a social device providing financial compensation. In understanding the concept of insurance as a risk transfer mechanism, the three concepts that must characterize its solubility are transfer, there's a common pool, and there's equitable premium. Also, there are features that prevent just anyone from assuming risk with the intention to insure any subject matter of insurance. It is in this discourse that insurance is viewed through the lens of the following feature. You will pardon me, I don't know how best to simplify these words. These are technical words, but I will just say them as they are. Insurable interest, there must be a lasting interest that defines the relationship. There must be financial value. The exposures must be such as they are homogeneous. It must be pure and particular. And losses must be reasonably unexpected. It must be reasonably unexpected. It must be consistent with public policy. And there must also be what lawyers call consideration, which we call payment of reasonable premium. What are the benefits of insurance planning? Why we cannot underscore the benefits of insurance, it is, however, important to highlight the benefits of insurance planning in the context of this discourse. It is beneficial to identify areas of need for insurance cover, considering our various peculiar exposures and potential risky ventures. Planning creates such consciousness of a deliberate attempt to critically analyze, identify risks that poses threats to our continuing existence. Another benefit of insurance planning is the mental rest and health that is sustained by appropriate planning, which enables the procurement of insurance cover. Insurance planning enables budgeting for the unexpected. Once we provide for the appropriate premium, we will be indirectly providing for the unexpected, since the insuring company will be duty-bound to pay compensation in event of the occurrence of the unexpected. There are various plans and insurance cover that could be obtained with other sideline benefits, such as tax relief. Whatever premium you pay in respect of your insurance is subject to tax relief. Insurance solution. Financial services industry is an important pivot to the growth and sustainable development of any nation, due to direct link to enhance access to finance, leading to improved income, poverty reduction, and stable financial system. It is imperative to reiterate that the financial services industry is central to the growth and sustainable development of any nation because of its direct impact on access to finance, being a catalyst to improve income, poverty reduction, and stability in the financial system. As a subset of the financial services industry, insurance business is a pivot to guarantee the sustainability of growth and the development of the state and its people. Distinguished attendees at this lecture, the control of risk through risk transfer takes me to the major point of discourse today, which is the insurance solution, which can be viewed from these listed vices. Insurance industry has maintained a positive trajectory of consistent growth in spite of operational hurdles in the financial sector, owing to the macroeconomic volatility and competitive dynamics. Underwriters exhibited notable confidence in their ability to retain substantial portions of the risk within their portfolios, which depicts an industry average of about 67%. What I'm saying is that unlike before, when about 90% of businesses are being shipped abroad, now it has been reduced substantially. Companies now retain as much as 67. And what this translates to is that it builds confidence in the sector. It is important to note that the insurance industry is one of the few sectors that continue to record growth in spite of the economic recession and the impact of COVID-19 pandemic in 2020. From a premium of 282 billion in 2015, the Nigerian insurance industry generated gross premium income of 616 billion in 2021, 789.7 billion in 2022, and a record-breaking 1.003 trillion as at the end of December 2023. Also, the asset of the Nigerian insurance industry also grew from 827.5 billion in 2015 to 2.5 trillion in 2022 and 2.7 trillion as at December 2023. It is therefore comforting that the insurance industry is now more willing and prepared to meet the needs of the insuring populace through insurance solutions and availability of products. We quickly look at government support. Government, through various agencies, has shown dedication and priority of ensuring that minimum insurance covers are in place to protect unsuspecting members of the public and protection against third-party liabilities. The National Insurance Commission is a statutory agency of the federal government established by the National Insurance Commission Act 1997 to regulate and supervise the Nigerian insurance sector. The commission is the advisor to the government on all insurance-related matters. The commission derives its regulatory and supervisory powers from the NICOM and Insurance Act 1997 and 2003, respectively. Consequently, insurance and reinsurance companies, insurance brokers, loss adjusters, agents, and all insurance activities generally fall within the supervisory and regulatory purview of the National Insurance Commission. In consequence of the losses, the victims are prone to sufferings, which in many cases may lead to total impoverishment of a large proportion of those affected. To ameliorate the situation of the victims, laws have been put in place for an arrangement that will ensure that victims, especially the third parties, are adequately compensated. The objective of protecting third parties and relieving the government of avoidable burden of compensation from the meager wallet of the government led to the enactment of various laws on compulsory insurance products. We are all living witnesses to Christ. The rains are coming. People that build on the flood-prone drains, they are still there. And they're likely, just like they did last year, also cry to government this year again, asking for relief. This can be better planned and taken care of. Ladies and gentlemen, over the years, the National Insurance Commission has embarked on a series of programs aimed at a nationwide massive public enlightenment with respect to compliance with the laws on compulsory insurances. What are these compulsory insurances? The following insurances protect third party against liabilities. All buildings under construction that are more than 2 floors. When I was coming in, I saw some structures under construction. I want to believe that it is not only voluntary, it is mandatory. I want to believe that the university have made arrangement for the insurances of those buildings. I will say that only in this hall. All public buildings, including those of academic institutions, including where we are, offices, hotels, hospitals, markets, we call them occupier liabilities. If I trip here now and something happens to me, who takes responsibility? The university authority, we have to look for money. If I have to be flown to Germany, they have. But if there is a public liability cover for public building, the insurance company takes responsibility. Then group life insurance for all employees of both public and private sector, it is mandatory. Professional indemnity for all medical practitioners and third-party motor vehicle insurance in respect of death, injury, or damage to the property of third parties. I don't want to take a sample opinion here as to many of us that are driving. If we check your papers today, I don't know how many arrests I'll be able to make in this hall. Agency collaborations. The need for collaboration with the agencies of the federal government as well as state government in ensuring that interests of insuring public is protected had been at the priority list of the drives of the nation's insurance regulator. The commission was able to establish formidable collaboration with the following government agencies, among others: the National Pensions Commission, PENCOM, the NCDMB, the Federal Road Safety Corps, and the likes. Now we want to look at personal arrangements. No, we talk about the government, we talk about the institution. We must therefore be intentional in being proactive and in planning for the rainy days, either as students or staff. The high level of volatility and uncertainties should create the urge to transfer our risks. As individuals, we labor to build up wealth, which will meet our various needs, while in service and also for the future. Properties are acquired for our comfort, but have we stopped for a second to think of a possible mishap to any of these properties? How will the affected property be replaced? Now, you're no longer working. If you are towards your retirement, if you are in retirement, what happens? Now to insurance, to students. I must say that students are better positioned to plan ahead when it comes to securitization of their future endeavors. There are many insurance products that address different needs of the students. But I will talk about one that is very common. The completion of education of any student is contingent on the continuous survival of the benefactor. The death or permanent disability of the benefactor is capable of truncating the affected student's education. I'm sure we must have seen such. There are insurance products that are designed to ensure that the education of such a student is not affected should the death of the benefactor occur. Pre-retirement planning. While still in service, all workers are encouraged to begin to build up their wealth through savings by procuring the appropriate insurance products. That is why we must continue to appreciate the creativity, the initiative of 2004, when His Excellency, the former President Obasanjo, moved the idea of establishing contributory pension funds. I know some institutions want to pull out of it because of quantum, but I still think it's the best of probably two evils. A situation where people don't get their gratuity. We know what happens in states where people will retire, they don't get their gratuity until probably it is the beneficiaries, if at all, that we begin to pursue, because the main person that worked must have probably passed on before they consider, and these things are even paid in bits. There are appropriate insurance products that will assist worker in event of any of the following, among others. Even whilst you are still working, there are insurances against loss of job, loss or destruction of assets, your car, your building, loss of other investments like farmland. I don't want to go into other businesses because I'm aware that as public servants, the only business you're allowed to do is probably farming. But I know that some people are trading. Then what provision do you make on retirement? Let's look at retirement benefits. At retirement, every worker is expected to receive some benefits that are probably consistent with their length of service and earnings during the service period. The Pension Reform Act 2014 makes it mandatory for every employer to make contributions into the pension fund through an appointed pension fund administrators. The accumulated fund is paid out to retiring worker either through an insurance company or through a pension fund administrator. As individuals, I will recommend that additional voluntary pensions arrangement be made to increase the earnings at retirement. For those who still have a long time on the job, I say congratulations, because what it means is that you have a longer time to make that contribution, to accumulate that wealth. But for those who probably came in mid-stream in their years, you will certainly need some additional voluntary contribution. I'm telling you this by my own experience, because that is what is going to grant you the comfort that you need after service. The Vice Chancellor, principal officers of this university, I went through the website of the university, and in the Vice Chancellor's, inaugural lecture, one of the areas he identified we want to excel is the expansion of the programs of the university. I will at this point recommend that the Vice Chancellor begin to look at insurance and actuarial science as part of the courses of learning in the university. These subjects, which are business-oriented, if considered for accreditation and made elective for other disciplines, will enable independence of the students post-graduation. And I will say that you may not necessarily need to fund these from the resources of the university. I want to believe that with the appropriate consultation, there will be institutions that will be ready to support the university in establishing this faculty. My conclusion: the Vice Chancellor, other principal officers of Federal University, Lokoja, students and other attendees at this 7th public lecture, it is time for me to conclude my submission, which I will want to call the takeaway of the lecture. The reward for service render constitute the major source of fund for wealth creation. Why it is necessary to create the wealth for living is sustainability. When the primary source is no longer available, must be of concern to all. So it's not just while you're working, you do all that you can to build up the wealth, but what happens when you are out of work? The Federal University, Lokoja, under the leadership of the Vice Chancellor, has experienced enormous increase in the asset base of the university. It is visible. I want to recommend immediate arrangement should be considered for the insurances of these assets. This will free funds for other developments. The group life insurance for the most important asset of the university, which is the workforce, must be given the priority in the annual plans of the university. This should be the guarantee for the future of the dependents of disease worker. Individuals need not be afraid of retirement. You know, in the public sector, now that they have EPs, they call it EPs or something.
Okay, so
I want to believe that it's now difficult for people to change and alter date of birth.
okay.
But I'm also aware that in the public sector, it is not uncommon to carry different ages as you progress in your service. The closer you are to retirement, the younger you become. Individuals need not be afraid of retirement. If beyond the statutory arrangement, personal plans by way of voluntary contributions are made while in service for the life after retirement. Individuals should endeavor to ensure acquired assets against fire, flood, burglary, and other possible risks. The Vice Chancellor, the principal officers, Federal University, Lokoja, my families and friends, all attendees at this meeting. I conclude by thanking the Federal University, Lokoja, through this distinguished, I wonder why Vice Chancellors are not called Excellency. Probably I will start today. Through His Excellency, the Vice Chancellor, because indeed, they are more excellent than some of the excellencies, for inviting me to be the speaker at the university's 7 public lecture events. I thank you all, and God bless you.
You can do more, please. More class. Thank you very much. Thank you very much. Please be seated. Mr. Vice Chancellor, sir, I referred to him earlier as Mr. Insurance. With your kind permission, I would like to open the floor as usual of this comments, interactions. We'll rate this because I'm aware that the lecturer would be getting back to Abuja shortly after this. I would like to invite Professor Olorundare Ajayi. That's our Director, Institute of Governance and Development Studies. All right.
Your Excellency, the Vice Chancellor. You see, we try to look down upon ourselves as lecturers. Recall the Polish ambassador came here and referred to him as His Excellency. Today, our public lecturer has also referred to him as His Excellency. So as a privileged Senate leader, I want to refer to my Senate President as His Excellency. The distinguished public lecturer. When the DVC was giving his resume, he never told us that he had any prior teaching engagements. But you agree with me that this delivery has been more than professorial. And of course, we cannot take away the sartorial elegance that goes with the presentation. Thank you very much, sir. You have opened us to new vistas. You see, when we started this job as a lecturer, one major fear we had, or that I had, was that of insurance. And I recall that in those days in Ilorin, most insurance companies would walk into our offices looking for clients. And one thing I thought about insurance was that it was just all about taking our money, and when it is time to pay back, we begin to look for them, and they become another thing entirely. But I think you have tried to dispel that wrong notion today. But you also agree with me, sir, that you cannot talk about insurance in this climb without recurring to the poverty level of the average individual and the employees. And I think that accounted for why ASU, as an organization, in 2004, objected to the contributory pension scheme. Because the argument then was that the take-home pay does not take one home. How do you begin to contribute from that home, from that pay? My prayer to you, sir, is that what suggestions can you give to the powers that be, such that while it is very easy to remove our money at the point of contributing, that same ease and respect which we remove our money will be accorded us when we retire, and this money will be paid back to us. I think that's the most important thing about pension. The contributions have been so voluntary now. And I also hope that when I decide to take back my money, it is very voluntary and peaceful, such that it is not the beneficiary that will take this money on our behalf. Once again, sir, I want to thank you very much for coming. You have added value to our public lecture this morning, and I can tell you that everyone here is going home with something positive. God bless you, sir.
Thank you very much. I would like to invite the head of Department of Accounting, Professor Onoja, for his question.
Good morning, Vice Chancellors, the management team, and His Excellency, my honorable lecturer. Thank you so much for what you have done. My name is Emmanuel Onoja, the accounting. Look at what the insurance company have done over the years to our economy. I want to thank you for your experience you have shared with all of us today. But from two things you have mentioned, I want your experience to guide us, because we as a private individual are putting up a bill to the National Assembly to stop some loopholes the insurance company using, exploring customer, particularly some of us that own 3, 4 cars or 1 car. We have been paying insurance for the past 10 years. They have not given us a call on the money they are collecting. Rather, they check on us. We don't know where the money has gone to. So when you mention about the premium of billions of naira declared by the insurance company. I say, if the EFCC is looking elsewhere, that is where they could look at. Because we as an accountant we believe what is revenue, what matching costs, you are matching your revenue to a cost. The money they are collecting from us, the motor owners, what service have they rendered to us? Nothing. But the government is supporting them by using some touts on the road. Some of my colleagues yesterday, they blocked them to collect money because of their insurance claim that are expired. Meanwhile, for the past 10 years, no insurance company have sent them a text to find out how their family is doing. So, sir, based on your experience, sir, what can you do to help us stop this government backing this thing? Because it happened in the tax industry. You pay tax, you go to rural areas, they stop them. No road, no water. Yet every day they block them to collect money. Thank you, sir.
Thank you very much. I'd like to call on the medical director, Dr. Chine, to throw comments, question, particularly with the T-ship and other insurance policies that our students are engaged in. Thank you very much.
Vice Chancellor, sir. Excellent. Other members of the Principal Officers Committee, our 7th distinguished public lecturer, sir. I want to thank you for this lecture. And I believe that every other person that spoke before me has also talked about the perception of the average Nigerian concerning insurance. And I want to thank you for teaching us once again and enlightening us about the types of insurance that exist. I saw the indemnity insurance for the medical practitioners. And I remember when the MDCM was forcing us to get it. If you don't get it, you cannot do anything. And just like other people said, till now, we don't really know what is going on with the indemnity insurance. And I also want to speak concerning another insurance like the DVC Aka talked about, which is the health insurance for the students, the T-ship, which also you talked about the students, their right to be alive, to become graduates. And we talked about insurance when they die. I have a question for that. Is it covered? Is it part of T-ship? You talked about when the students, their health and when they die, is it part of T-ship? The other thing I want to advocate is that I don't know if you can help us with the powers that be, that insurance and our health, especially for the students, should be prioritized, because our T-ship, we have so many struggles with it because of the amount that is approved by the federal government. So in managing the health insurance for the students, it has been quite challenging for us. And I also want to agree with them that when I got my vehicle initially, I was approached by insurance people to get a comprehensive insurance. And I was told in case of accidents, they would do something. Unfortunately, my car had an accident and they kept on telling me to snap my car engine and all that and not I ended up fixing the car by myself. So the next year, sir, I just went for third-party insurance. And that is what I have been doing till now, sir. So I want to also lend my voice that is there any way that we can see the benefits of some of the programs that we are doing? Once again, I want to thank you very much for making us appreciate the role of insurance in creation of wealth once again. And we wish you well, and we hope that whenever we have issues with insurance, that it will be a good help to us. Thank you very much.
I'll take 2 more. Professor Titus Omoro of the Faculty of Education.
Mr. Vice Chancellor, sir,
Let me join others also by calling you Excellency. Maybe this will gain traction. The distinguished lecturer, you have said that insurance involves risk. And we know that a lot of risks are very, very uncertain. There's a trend that I'm noticing now. People who have saved money in certain banks, these banks are now said to be distressed. Heritage Bank is one. If rumors in this country is anything to go by, I'm hearing of other banks. Polaris, Wema. Let me stop like that. No, I've not heard about that. What risk have we actually taken? What length of risk have we taken by leaving our money in certain banks? And when these banks are distressed, we are asked to collect by NDIC 5 million. And if you have more than 5 million, you have to wait for such banks to be properly bankrupt through the processes, and then you will know whether we get something or not. Does that involve the careful planning you are telling us that somebody must plan very well, should not build where there is erosion? We should also not put money in certain banks. How do we know that these banks are safe and our money will be safe? Somebody who is retiring and he has saved 30 million, he can only get 5 million and he doesn't know what happens to the other 25. Thank you very much.
Thank you very much. Professor Ashagba, Head of Department of Business Administration.
Thank you very much. Your Excellency, our Vice Chancellor, the Principal Officer, our distinguished lecturer, we are very happy to have you, and I really enjoy your lecture. Congratulations, sir. I just want to ask 2 questions very quickly, sir. I want to know whether NICOM is like international law that has no police to enforce it. Because most of the laws are not enforced. For instance, for instance, PENCON is like international law that are not enforced. For instance, all employers in Nigeria are supposed to insure their employee of not less than 3 annual salary of the basic salary. It's not anywhere, state and federal institutions. Then also all contribution must be remitted before the 5th day of the following month. But sometimes we'll be receiving our alert that last month, August, remittance is just being remitted. Well, I think the PENCON should be able to help us to do something about it, sir. Then I also want to ask a question on insurance. Unfortunately, up to now, the penetration rate of insurance in Nigeria is still very low. Not only in the world, but in Africa. You can imagine that presently South Africa is doing very well. Countries like Egypt, they are doing very well. But Nigeria is still 0 point. For what reason? Of course, we understand very well that as Nigeria is, when we look at hierarchy need, somebody that is hungry is not looking for safety or security. But as much as possible, by the grace of God, the perception of insurance is getting improved now. Insurance can do something like social insurance and ensure that insurance can be taken to the people where more weekly, like it is being practiced in other countries of the world, premium at a very significant rate. And through that, I think we can do something on that. And I will also want to plead with you, because I know NICOM always have something to support university that teach insurance. And by the grace of God, presently, being admin with teaching courses in insurance, like element of insurance, risk management, and a number of them. So we want to know how we can approach you to get the benefit. Thank you very much, sir.
Finally, I would like to invite the Provost of the College of Postgraduate Studies, Professor Benga Ibile, for his question. Professor.
Your Excellency, the Vice Chancellor, members of the Principal Officers Committee of Federal University Lokoja, our distinguished 7th public lecturer, thank you for this awesome outing today. You have shown that your profile that was read to us was not a ruse. You have earned every accolade as demonstrated there. The speakers before me have talked about perception, meaning that we can talk about reality. And one of the realities you outlined in your lecture was that insurance assets or earnings are in the region of 1.003 trillion naira. That is humongous. And so one would expect that there would be a correlation between these fabulous assets and the benefits that accrue to those who make the insurance industry to have these assets. So that takes me to my comments, sir. Recently, we read in the newspapers that the federal government a loan from pension funds. And that led to some trepidation among workers. When the federal government takes such loans, what will be the fate of the contributors? Secondly, sir, we are made to believe that pension administrators, when they take our money, they invest, sometimes in real estate, sometimes in bonds and other businesses. Meanwhile, it is contributory. So what I contribute is what I am expected to take at the end of the day. Why is it that there is no appreciation? Because my money has been invested. Thank you very much.
Thank you very much. Mr. Guest Lecturer, I would like, before you rise up, sir, I would like to invite the registrar who has very disturbing question I would like to ask. Registrar, ma.
Thank you so much, sir. Vice Chancellor, sir. Other principal officers, distinguished Senate members, everyone present. My question is, well, indirectly to you, to help us ask PFAs why they don't save our money in stable currency. Because if you save ₦1 million today, given the fluctuation we're experiencing in the financial environment, in 2-3 years when you are retiring, maybe, it probably won't be worth 200 naira. So can there be anything they can do to save our money in more stable currency? Thank you.
Your Excellency, the Vice Chancellor, principal officers of the university, I was thinking that I want to believe that probably the insurance cover I took was not of full face value. Otherwise, I was thinking I was going to deliver my lecture and run out through the other door. I never knew that there are going to be questions of this nature. I wasn't told. But it's exciting, and it has given me opportunity to also expatiate on those things that are not probably contained in my lecture. The question by Professor Olorundare, I think I'm right. Insurance on poverty level, should contributory pension be? Where are we coming from? I think we should look at where we're coming from. The contributory pension scheme, when it was on pay-as-you-go basis, first and foremost, for those in the private sector, your employer can sack you and give you 1 month's salary, and that's all you get. But with the coming of the contributory pension scheme by the 2004 Act, it became mandatory that compensation must be paid, relevant to your period of service. Again, there's a difference between delay in payment and non-expectation. Of course, like some other things, we have gone through different administration and attitude to employees' compensation have been variously taken. I believe that the speed in payment of pension is a function of response of the administration to those issues. But I must say that it has been a remarkable improvement from what it was. Those who have parents that retired under the pay-as-you-go, they know what the parents suffer with respect to payments. In Abuja, under the bridge, under this thing, you see a lot of old people there who were waiting for payment of pensions. But I think that has reduced drastically with respect to those under the contributory pension scheme. So I think it's part of the very positive initiatives of the federal government. Professor Noja, what has insurance done to the economy? I think the concept of conservatism is why the insurance is not publicizing some of the things that is done. I'm not too sure most of us here can remember that the creation or establishment of Abuja was largely enhanced by insurance. What you have today as Transcorp Hilton was built by insurance money. When nobody believed in Abuja, insurance funds was mobilized to create a place of comfort for the investors. The Sheraton was built by Nigerian Re's funds, insurance funds. I'm not talking about some other funds that have gone into some capital projects within the economy. Insurance of cars without claims, when do we get the benefits? I'm not too sure. If you have a neighbor that has had an accident, it's not likely to have the same story. What I mean is that insurance is based on the principle of pooling. It's based on the principle of community living, communal living, if you like, whereby the few that are unfortunate benefit from the other members of the community. So for the fact that you have been insuring for 5 years, 10 years, first and foremost, that's what we call no claims discount that you enjoy. 2, the fact that your neighbor who was not as fortunate, but in the first year of his insurance, got his car stolen and was compensated, must have benefited from the money you contributed. That's how it works. And of course, in the African setting, I'm sure that principle was taken by the world from Africa. Because when you talk about being brother's keeper, it's more in Africa than any part of the world. So that is the basic principle of insurance. Now, Dr. Chine, health insurance, this belongs to another sphere. You are aware of the National Health Insurance Authority. I guess that probably what I've done for this staff is with respect to the national, it's under the National Health Insurance scheme. Now, of course, insurance also can provide health insurance. They are authorized by the enabling law. But the one that you have mentioned relates to the national health insurance. Then the issue of comprehensive, are we be interested in knowing the insurance company that was involved in the accident, why your claim was not paid? One assurance that I can give here today, as the former commissioner for insurance, if you have a claim, no matter how long it is, you will be paid. And not just paid, somebody may have to explain why it was that delayed. Professor Titus, savings in banks, what is the remedy for the depositors? You answered it yourself. You mentioned the issue of NDIC. You remember that when NDIC started, the maximum you could get was 200,000 naira. It later increased to 5 million. Now, for big savers, there is what we call due diligence. NDIC is largely meant for small savers. For big savers, before you put your money in bank ABC, it is expected that you have a reasonable knowledge of that bank. So don't throw your own responsibility onto the laps of the government. Yes, the central bank has the responsibility of supervision, of regulating, and ensuring that they comply with rules. But I ask this question: if today, as we are seated here, there is a flash in the papers that First Bank is experiencing some distress and it comes from central bank, 50% of those who are here who have money in First Bank will no longer hear what I'm saying. Not only that, that will quicken the death of First Bank, even where they have the chances of survival, because there will be a run on the bank. That is why information with respect to financial institution is not usually made of a public nature. And that is why due diligence by savers is very key. When you flip through the papers and you go through the accounts, and the regulators make it mandatory for all financial institutions to publish their accounts. When you go through these accounts, you are supposed to look at it, not just say, they have, just flip over it. If you're a big saver, you are supposed to be interested. Accounts of financial institutions are public documents. You can demand for one if you are such a big saver to protect yourself. Professor Fashagba, am I right? Enforcement of laws. Of course, regulators are not essentially law enforcement. They only collaborate with law enforcement agencies. There's a difference between those institutions that are meant to regulate and supervise operations and those that are set aside to enforce the laws. But of course, there's a synergy between the two, because what I'm saying in essence is that this enforcement has a collective, there's a collective responsibility here. But we talk about NICOM being not enforcing to a large extent. That may not be completely right. Some level of enforcements are going on. Well, it can be improved upon. But I would say you talked about also penetration is low. I would have wanted to know what percentage of your annual budget is spent on insurance. That will give me an idea as to what we can do about the penetration. Because if you and I, we are not insuring, how will the penetration grow? The penetration is a function of the nation's GDP. Premium income vis-a-vis the nation's gross domestic product. Now, how do you relate these? It is the premium you and I pay that forms one leg. Then, of course, we know that Nigeria is the biggest economy in Africa. Now, if you are doing 1 trillion, for example, in 2003, if you look at it vis-a-vis the GDP of the nation in 2023, it will still remain low. However, in terms of absolute, you compare Nigeria with other African countries, we are doing a lot better than most countries. But with respect to penetration, Nigeria will be like number 5. It is because of the level of the economy. It's not growing, insurance is not growing at the same rate as the growth of the nation's economy. And part of it is what has been mentioned from by the audience, which has to do with still not being able to buy fully into the concept of insurance as a financial intermediary instrument. How can university access the facility of NICOM? I mentioned it in my lecture that with appropriate consultation, NICOM will assist. In the past, we have assisted during my tenure, we assisted a lot of universities to establish actuarial and insurance program in their universities. However, and the Vice Chancellor can bear me witness, the commission now, NICOM, has been categorized as government-owned enterprises. What it means is that the fund that was available to the institution has been likely reduced. 50% of the funds of the commission is now taken from source by the government. And those were some of the things that were hitherto used to support some of the stakeholders, including institutions that are interested in running insurance and actuarial courses. We call it backward integration. We want to make sure that we get them prepared. Then when they come to the market, they do very well and we'll be able to take advantage of the knowledge that has been gained. We even went to the extent of sponsoring lecturers to go and gain additional knowledge outside. We did a bit of that during my tenure. We were giving institutions 100 million for them to start either to build infrastructure or to start, including accreditation. We did a bit of that those days. But road is not closed because it's a requirement of the law. It's a requirement of the insurance, of the National Insurance Commission, that we have a responsibility to develop. I'm still saying we, because I left not too long ago. So we have a responsibility to develop the insurance and actuarial matters with respect to our economy. So with appropriate recommendation, once things improve, one can begin to talk to the appropriate persons to see what can be done. But it will start from writing an application of request from the university. I can't give the details here, but I'm sure with appropriate consultation, things can be done. I started one with Ayagba. We got to some point before this reassigning of the commission as GOAs came up. We actually started and we've done inspection. We were to begin to release funds when this came up. So, but I believe that when things improve, the FUL can also benefit from such. The Dean, Faculty of Postgraduate Studies, thank you for your comments. what benefits do insuring public get from these large funds, 1 point something trillion? That's one side of the balance sheet. Have you looked at the other side of claims that were paid? Have you looked at the other side of it, investments that have been done? So we have to look at the entire balance sheet, not one side of it. So the funds, I can tell you, are being utilized effectively. Then the loan by the federal government, I think this is likely to be more of hearsay. I haven't seen any document where the federal government agree that they want to take such a loan. We've had it has been debunked severally. And if it's something, I know I was on the board of PENCOM for many years, and such a thing was never discussed. And I know that Nigerian Labour Congress representatives, TUC representatives sit on the board. They cannot be on the board and allow such a thing to happen. So I think you should, cool temper. Like my former vice president will say, a farabale. I don't think I think it's more of hearsay than anything. Then you contribute so much and they return to you what you contributed. I think you have to put them. I'm happy the head of our accounting department is here. If you do the proper analysis, it may not be exactly what you contributed that you are getting. By the time you draw the line and look at the periodic payments and you match it with the present value of your contributions, it's likely they are not exactly equal. The difference is likely to be accounted for by probably the interest that must have accrued over time. I'm just saying likely. Then to the registrar, PFA and savings of pensions contributions. Yeah, I think, the PFAs, it is mandatory that they take these contributions. And of course, when they take the contributions and the savings are made, I wouldn't know exactly the challenge that you did mention. Okay, thank you very much. It's a combination, you're talking about the value. Yeah, thank you very much. It's about the value. Now, by our law, there's a limit to which you can invest in foreign currency. There's a limitation without breaching the CBN law. The pride of a nation, part of the pride of a nation is its currency. The easiest way to devalue our currency is to ignore it at the expense of foreign. At the time, I don't know of Lokoja, but in Abuja, rent were being asked in dollars. You want to rent a house? They will tell you the amount in dollars. This is part of where our challenges started from. There are shops in Abuja where items are labeled in dollars. So now if you begin to domicile these in foreign currency, yes, you might say it's stable, but stable at which expense? At the expense of our local currency. That's what it means. So we must balance this out. We must be able to know exactly what we want. Do we want to do anything that will strengthen our local currency? I think it's something that we need to think about. Although I'm aware that bonds, foreign bonds, bonds in foreign currency are issued. The extent to which access is gained into allowing both the PFA and insurance company, there are some discussion that was already going on before I left office as to the extent to which you can allow some of these funds to be invested in foreign bonds, foreign currency bonds. It was already going on. Again, it's something for consideration, something that can be looked at because we need some level of stability. If you take, we all know that 5,000 3 years ago is no longer the same 5,000 today. But we also know that you cannot get 30% interest on your funds in the UK. So if you get 2%, 3%, I think you have done well. So His Excellency, the Vice Chancellor, the Deputy Vice Chancellors, Principal Officers, brothers and sisters, I want to thank you for the audience. God bless you. Thank you very much.
Thank you very much. Please be seated. The oracle has spoken. And two things. Anyone that is here and has unclaimed money, no matter how long that it is, now that the oracle has pronounced, we can assure you that the Vice Chancellor will compile their lists and will come after you. He's very good at doing that. And secondly, that we're looking forward through you to establishing actuarial science. No matter how lean the routes might be, but that you have spoken, we are assured that will take us through. Another round of applause. As usual of the Vice Chancellor, he would want to appreciate you with a token of the university souvenir. I would wish to invite you to come forward for the Vice Chancellor to make this presentation. The Vice Chancellor, sir.
Sir, thank you, sir. But before I make the presentation, please let me quickly recognize my father in the house, Dr. Olorundare. Please, a round of applause for him. Thank you, sir. And my junior brother, the former Commissioner for Environment. Oh, no, thank you, sir. Let me also recognize the representative of the DSS DGA. Let me also recognize the representative of NNS Lugard. Yeah, you are welcome, sir. Thank you, sir. Sir, on behalf of the university, gold and silver we don't have, but this, yes, no, the gold is not available now, sir. Thank you, sir. Please, this is a token of our appreciation, sir. Thank you, sir. Yes, sir. This is to commemorate your presence here today. Thank you, sir. Thank you, sir. Please, the Dean of Management, the Head of Department of Accounting, the Head of Department of Business Admin, you have an assignment before you. By grace of God, whether next year, he has assured me we can start that program. Thank you, sir.
Thank you very much. The Vice Chancellor would want to have an interactive session hereafter with the lecturer and his guests. Deans, directors are invited for this occasion. I would like to invite the registrar to come forward and present a vote of thanks to the registrar.
Yes, sir. Can we make the applause a little bigger for our guests? Thank you. The Vice Chancellor, Your Excellency, I want to advise that we restrict that excellency to FULO so that it doesn't get arrested outside here. So for here, Your Excellency, our Vice Chancellor, our colleague principal officers, provost, deans, heads of departments, distinguished ladies and gentlemen, it's my pleasure to give this vote of thanks. I'd like to begin by thanking God, as always, for making this a success. The 7th of our series of distinguished lectures. It has become quite normative for us at FUL. We get to give these lectures frequently, and this is the 7th. We're very proud of you, sir. We thank you for honoring our invitation and for giving such a beautiful, like most of us used to really loathe insurance. I used to, I never really understood what they were up to. I always said that they had hidden agendas in their forms because they won't tell you, don't let another person drive your car. And if somebody else now drives it, they ask you, why did you give it to the person to drive? So those little clauses are always there. But now we're better educated, sir. Thank you so much. I'd like to thank the Vice Chancellor, as always. He drives all of this. And most of the big names we have had to invite, we have attracted to our universities are courtesy of his contacts and network. So we're grateful to you, sir. Thank my colleague principal officers. In a special way, thank DVC Akad. We call him our class prefect. In case you don't know, he's the class prefect of POC. Thank you, sir, for always organizing these beautiful lectures. We thank our provosts, deans, professors, everyone present. We thank you for being such a wonderful audience. Our music students, you know, you were not even, maybe your parents were not even married when we started singing Nigeria We Hailed You. We thank you for doing a good job. And well, everyone here, the PRO, the managers of our restroom, they do a good job all the time. Sometimes we forget to thank all of them. Thank you, our dear guests. Former Commissioner, thank you. And thank you, NNS Luga. They're always present at our lectures. We appreciate you. Thank you so much. Thank you, everyone.
Thank you very much, Registrar. Please, you may want to clap some more for all of the principal officers. Thank you very much. Your Excellency, the Vice Chancellor, sir, with your kind permission, I'd like to extend an invitation to all our guests who are seated here for the unveiling, commissioning of the Federal University Lokoja Zoo and Conservatory on the 13th of this month. You are invited, and this will be happening right there at the zoo on 13th. Thank you very much. Faculty of Management Science is also extending an invitation. Their program starts tomorrow morning here at 10 a.m. in this auditorium. Do not forget that the Deputy Vice Chancellor Academic had earlier said the deans and directors, our guests, will join the Vice Chancellor for an interaction in his office hereafter. We will rise now, with your kind permission, first to take the national anthem, then the university anthem. Thereafter, sir, the Vice Chancellor and principal officers will come forward for a group photograph. The national anthem, please. The university anthem, please.
Greatest FUL. Greatest FUL.
Great.
For the greatest FUL.
Great. Thank you very much, sir. Please, the group photograph, the Vice Chancellor and the seventh distinguished lecturer first. The Vice Chancellor and the lecturer first. The Vice Chancellor and the lecturer first, and thereafter the principal officers will join. The Vice Chancellor and the lecturer first. Then principal officers will join. All right. Thank you. Principal officers, please. Principal officers, please. Heads of security. Yes, our guest, please. Distinguished. Hold on. Hold on. All right. Please, our guests. Please. Provosts, deans, and directors. Please, you hold on. You just hold on. Done. Thank you very much. Distinguished senators. Yes, thank you. Distinguished senators, directors, senators, professors, please. Please, all professors, please. Please, deans and directors, do not forget, you have an interaction right away with the Vice Chancellor, deans and directors. Do not forget you have an interaction right away with the Vice Chancellor in his conference room, please. Thank you.